Okay, let's talk about this week in real estate. This is Josh. I'm with NEXA Lending. I'm here to help you buy your first home, build your investment portfolio, and benefit others from your vacation home one day. So I want to help you with all three of those transactions, and I'm the mortgage guy. But let's talk a little bit about what's happening with interest rates, kind of in general. I had somebody this week tell me that they said, Josh, your business must be doing great with all the things that Trump's doing to drop the interest rates. Well, I just want people to understand that interest rates are not really tied directly to a president. Over the last, 12 years or so, we had Barack Obama, Donald Trump, we had Joe Biden, we had Trump again. And, you can look at, I've kind of highlighted in blue and red and blue and red, you can kind of see what's happened. And so, yeah, it looks like during Joe Biden's time, interest rates went flying up. But interest rates are really more driven by the economy. They're driven by inflation. They're driven by Fed decisions, which really should be totally separate and not connected to the president at all. Now, presidents can do things that influence rates, but mortgage rates really follow the bond market more than politics. They move closely with the 10-year Treasury bond. The market reacts to daily job reports, inflation data, wars, oil prices, economic fear. All of those things drive rates much more than who is in the White House. The Federal Reserve, they don't directly set mortgage rates either. So when the Federal Reserve board, they drop interest rates or they push interest rates up, sometimes rates actually do the opposite. In fact, the last couple of times, that's actually been what happens. Mortgage rate setters have anticipated a drop or anticipated a rise, and they've kind of moved rates one way or another. And then when the announcement actually happens, the rates go the opposite direction. So you can't, now that doesn't mean they went the opposite direction because things got worse, but they went the opposite direction sometimes for selfish reasons for those mortgage industries. So a president can influence the economy over time, but the Fed and the bond market have a much bigger day-to-day influence on rates than who's sitting in the White House. Most analysts point to February the 28th as the beginning of the current war, but the conflict noticeably escalated between March the 1st and March the 6th, and that kind of drove rates up. So fighting spread beyond the initial strikes. It became a broader regional conflict, and as a result, rates moved. This is what actually happened in the last 7 days. Since last Friday, inflation fears rose, oil prices climbed, the 10-year Treasury yield is climbing again. And that, if you'll notice, this chart right here is just the last 7 days, and rates have kind of ticked up. They ticked a little bit down yesterday, but we've got a negative Friday coming. So people are always thinking, well, what happened this week that could have influenced that? Yes, the Kevin Warsh did become the Fed chair this week, and President Trump did appoint Kevin Warsh. Now, there's really supposed to be a dividing line that kind of keeps the Fed chair and the Fed board separate from the president, but the president, our current president, did appoint both Warsh, and in his first term, he actually appointed Jerome Powell. Now there should be that dividing line, but there's really an attempt sometimes by presidents to influence those. I say sometimes, but it's specifically happened in the last 2 years. Okay, another thing that happened in interest rates and in the mortgage world this week is Rocket Mortgage has sued UWM. What happened was Rocket Mortgage a while back purchased Mr. Cooper. Now, Mr. Cooper had some horrible practices, in my opinion. Anyway, I think there's an important distinction between what's happening now in this lawsuit from Rocket against UWM. I think it gets lost. You people see there's a lawsuit. Somebody must have done something wrong. Many of the past criticisms and settlements involving Mr. Cooper, it was Nationstar before that. They were tied directly to borrower servicing experiences, foreclosures handling, payment processing issues. I kind of learned about this when a customer of mine called me and said, Josh, they're making me get flood insurance. Why are they doing this? And I looked at their map and I realized they weren't in a flood zone at all. But it was Mr. Cooper was requiring them to have flood insurance when they didn't need flood insurance. And so I started doing a little research about Mr. Cooper. And Mr. Cooper has had lots of complaints from consumers. Rocket's also been criticized in the broker world for aggressive direct-to-consumer recapture strategies. In other words, kind of taking customers from the brokers. And so Rocket and Mr. Cooper and Nationstar, I feel like a lot of those accusations in the past have been very hurtful directly to the consumer. Now, what's going on right now is Rocket is suing UWM for something that UWM is doing that is hurtful to Rocket. But I don't think UWM's practices at all are hurtful to the consumers. So we're looking at two different kinds of problems here. You say, Josh, are you just defending UWM because you use them a lot? Maybe there's some truth to that. I use UWM. They're fast. They're efficient. They've got more processors and underwriters, and they've got more people involved to help us get these things done quickly. And the rate is very fair. So yes, I like UWM. Not a fan of Rocket. I feel like they, again, they're being in bed with Mr. Cooper. Purchasing Mr. Cooper is another thing that just gives me a bad taste in my mouth. Yes, a lot of good lenders used to sell their servicing rights to Mr. Cooper, which is, that's the reason Rocket went in and bought that company to capture all those servicing rights. Okay. What else is happening in the real estate world? The housing inventory is quietly improving. This matters for buyers because inventory's up. Some homes are sitting a little longer as a result, and sellers are pricing more realistically. I think this is actually good for the consumer, and it's a positive thing that's happening. So inflation is still ticking up. Jobs reports are still stronger than expected. That kind of tells me that we're probably not going to have a rate cut coming in soon. So what do? Well, you buy now, you marry that home, you find the house that you want, you date the rate. You take that interest rate that we can get the best. Now listen, I locked an interest rate this past week at 4.999. You say, Josh, what is that? Well, we're offering, and this is through United Wholesale Mortgage. They're offering a free. Now I never recommend buy downs. Now UWM is trying to get us to offer buy downs more. I always offer them. You're always welcome to a buy down, but this is not a buy down. This is a free down. So right now, whatever your rate that you qualify for in a conventional mortgage, you got to have a 700 plus credit score. But if you are buying in a conventional mortgage right now, I can give you a full rate point lower. I think it's a deal that's going on this month for the first year. So they locked in at 4.999, and for 1 year they're going to be at that number, and then for the next 29 years they'll be at 5.999. But that first year free rate buy down, it's a pretty sweet deal. It's a bonus. It's something that's good for the consumer, and that's the reason I'm telling people buy now. Let's get you in the house. If the rates drop in the next 12 months, you can always refinance, and maybe you can lock in for 30 years in the 4s. Wouldn't that be sweet? Okay. Anything I can do for you, don't hesitate to reach out. I wanted to just give you every week on Friday, I like to give you an update about what's happened in the past week so that you can know, and the more you know, the better you are ready to buy or to refinance or whatever you need to do in the coming week. Realtors, loan officers, reach out anytime. I'm here to help you all I can.